Welcome to this session. This is Financial Accounting by Coach Samuel Ibanda. We want to look at one of the questions that is in one of the exam for December 2022. So it's question 4, and it is requiring us to do an adjusted trial balance. And it is asking us to do a statement of financial position. And it is worth 20 marks. It's very important that whenever you approach a question, even before you start reading it from above, you first run down to what the examiner is going to require you to do. Why? Because even as you read through the question, as you go through the details, your mind is already trying to pick to understand that this is what I need to be to prepare for. Okay, so this is what exactly the examiner is asking for. So they're telling us that the following trial balance was extracted from the books of Hehe traders for the year ended 30th June 2021, and a statement of financial position was prepared from this trial balance. Now, one of the things that you must have appreciated right now is that the examiner usually gives you the trial balance. If you remember what we said with the accounting process, we say that as transactions come in from source documents, we enter them books of original entry. From books of original entry, move transactions to ledgers. And from ledgers, we balance them to the trial balance. The examiner will give you items. For example, for most of the questions, they'll give you a question at trial balance level.
Which question are you looking at, please?
This is December 2022. I don't know if you're able to see my screen.
I'm seeing the screen. It has August 2018.
Okay, just a moment. Okay. Can you see now the one?
Yes, I can now see a different question.
Okay, fine. Thank you so much for that. Okay, so I was saying that this question is requiring us to prepare for Hehe traders a corrected trial balance, clearly showing the adjustments and a statement of financial position. And it is, of course, 20 marks. They're also giving us the template we should use to prepare our adjusted trial balance. So I say that before you actually read through the question, always look at what is the requirement of the question, and then you can come and read through your question. So this is our question. It says the following trial balance was extracted from the books of Hehe traders for the year ended 30th June 2021, and the statement of financial position was prepared from this trial balance. So I was saying that the trial balance is usually after the other steps of our accounting cycle. So let's look at our trial balance. So we have account title, we have debit, and then we have credit. So these amounts are in thousands of shillings. Let's start with the first one, motor vehicle, 350,000. Again, this is an asset, and it's a non-current asset which has a debit balance, and that is why it is here. We have machinery, which is 400,000. This is also an asset, non-current, right there. Equipment, it is also 180,000 right there. Land is valued at 150,000. It's also a non-current asset, which is here. Of course, I still reservations. I say that as you see motor vehicles, machinery, equipment, this might be inventory for companies that are dealing in motor vehicles, companies dealing in machinery, equipment. These items can also be inventory to them, okay? They, in that case, they can be current assets. But for this case, we've not yet found that, so we'll use We'll just understand them from that perspective, unless we're able to capture that as we read through. So we have furniture. Now, whenever you see assets, one of the things that you should come to your mind is to ask yourself, are these assets, the values they have given me here, are they cost values or they are net book values? Are they cost values or net book values? Now, if at all they have given you, because whenever you see values like this, you always ask yourself, is there anything to do with accumulated depreciation for these assets? And if it is there, then you know that these values that you have here are actually cost. This is the cost of these assets. And then down here, this is the accumulated depreciation for these respective assets. So this is very good to note. So sometimes the examiner tells you that this is the cost, but sometimes they don't tell you. So yours is to know that this is representing the cost. So furniture is yes given by 34,500. Then we have capital, which is that value. Now, capital is equity. Capital is equity. And I do believe that you know why capital is actually here. Okay? And then we have retained earnings, which is also equity right there. We have accounts payable. Accounts payable are liabilities, and they are current liabilities specifically. That's why they are here. Accounts receivable is 34,200. It's a current asset, and that is why it is here. Now, they have gone ahead to give us the profit for the year. Now, I want you to understand that these books we are looking at are for the period ended 30th June 2021. The retained earnings they have given you, the retained earnings here they have given you are for the beginning of the year. Okay? Before preparing the P and the L, which gives us the profit. So this profit you're seeing here on the credit side also is just like retained earnings. But this case, we've not yet added the two figures. So that's why it's also on the credit side, okay? The P and the L has a normal credit balance. So every time you get a profit, it will be on the credit side. If it was a loss, it would be on the debit side. Then we have accrued rent. Accrued rent is usually rent that is outstanding, was not paid. It is a liability at the end of the year. So we have 2,500. Then we have prepaid utilities. Prepaid utilities are assets, and they are current assets. And this relates to rent that was paid in advance, which shall be utilized in the next period. Then we have 8% per annum SACCO loan of 120. This 120 loan is a liability, and it's a long-term liability of 120,000. Now, of course, it's somebody may ask, how have you determined that it's a long-term liability? Of course, the size of the loan, but sometimes this loan can also be a current liability. It can be, what can I say? It can be a current liability if at all its period is less than a year, okay? But we shall read more information just to clarify on that. And of course, the current and non-current is the value is not a determinant of whether it's current, even if I've spoken about the substantial value, because somebody can borrow even 200 million and it's a 3 months loan, okay? So that is not really something that you should hold on to. But let's proceed. We shall be able to learn. So you see cash is 89,550. So cash is an asset, and that's why it has a normal debit balance here. Then we have bank. Now bank is ideally supposed to be an asset. a current asset. But like I said, sometimes bank can have a normal credit balance, and that is why we are seeing bank to be 15,450 on the credit side. Then we have accumulated depreciation. I already spoke about this. Now, this is depreciation for the previous periods for which these assets have been in existence, okay? And they have given us the values here, 1535125, machinery, that value, equipment, that value, furniture, that value. Then they have also given us provisions for bad debts. Provision for bad debts have a normal credit balance, just like the way this. One thing I also say that depreciation can also be called provision for depreciation. The accumulated depreciation can also be called provision for depreciation. All provisions are credited. This is a provision for wear and tear of the assets. This is a provision for those guys that may not pay us, the doubtful debts. As you can see, our trial balance was balancing. I said, if your trial balance does not balance, usually there are errors, and we usually introduce a suspense account to ensure that the totals balance. And the suspense account is a temporary account within our books for which we should correct the errors through the error correction process. Okay, so let's now look at the additional information that we've gone through our trial balance. So they're telling us that a review conducted after the year-end closure revealed the following information. So they're telling us that Hehe received a check of that value resulting from a disposal of furniture that had a cost of 25 million. The cost, the transaction had not yet been recognized within their books. They are going ahead to say that depreciation of non-current assets for their was not computed. Below is the extract from the Hehe's accounting manual relating to depreciation policy. Non-current assets, percentage per annum. Motor vehicles, 25%. Machinery, 20%. Equipment, 10%. Furniture, 5%. Like I said, the reducing balance and straight line method, these are very key methods of depreciation that you need to learn. And you know that reducing balance is on the net book value, where net book value is cost minus accumulated depreciation. Well, straight line is subjected directly to the cost. So they proceed to say that shillings 1.2 million out of the total interest for the year was paid during the year. The balance that accrued had not yet been recognized in the books. Interest is assumed to accrue evenly through the year. Now, what this means is that, remember, we have this so-called loan, okay? And they have told us that this loan is 80% per annum, okay? And the loan is 120 million. So if it is 8% per annum, and they're telling us, they're not giving us the time when this loan was actually gotten, because they're saying the management, okay, business negotiated with SACCO management to pay only interest. So during the first year, okay, let's just look at this. They're telling us that shillings 1.2 million out of the total interest for the year was paid during the year. The balance that accrued had not yet been recognized in the books. Interest is assumed to accrue evenly through the year. The business negotiated with SACCO management to pay only interest, not principal, during the first year of borrowing. So this, from my interpretation, is that we are in the first year of borrowing, okay? They have not given us the actual date when this loan came into play, but ours is to assume that it's been there for the year, okay? And if at all we are to calculate our so-called interest, what we shall just basically do is definitely, we shall do the 0.08 times 120 million. So the interest is about 9.6. The interest is 9.6. But the examiner is telling us that they paid 1.2. So it means that the difference remained outstanding. Okay, let's proceed. Now, this statement of the business negotiated with the circle management to pay only interest, not the principal component during the first year of borrowing, much likely our balance for the loan will remain the same as it is. It will not reduce. The obligation will still remain the same. So they proceed to tell us that 2.5 million of business cash was used by the directors for family outing. These are more of drawings. They are telling us that this was excluded from the books. If it was their money, well and good. But if it was business money, then we needed to account for it. So they're telling us prepare for Hehe traders a corrected trial balance clearly showing the adjustments, 10 marks. Then they want us to draw a statement of financial position, 10 marks. So hint, the examiner is telling us to use this format. So the first thing that I do is I'll just go on to draw the format that the examiner has given me to just ensure that I have the right thing. So you can also just draw it within your books, because as we proceed, I want us to make sure that we're able to proceed together. So account title. Okay. So I'm trying to draw mine, ensure that you are drawing yours as well, so that we can move at the same pace. Okay, good. Okay, trying to get done with mine. I'll just try to reorganize it. I'll just try to. So these amounts are in shillings, are thousands. Okay. I think I'm there. What exactly we have. Okay. Which is good. Once I'm there. So I'll just try to expand this down like that. All right, so this is part 1A of my question. And I'll now start with one thing that I usually do is when I get here, I usually open a page. I usually open a page and do working. I usually open a page and do my working because I would like to ensure that my workings are on track. Now, for me to be able to execute this question, I need to first deal with the additional information, even before I start populating my trial balance. It's very important that I deal with this and I just now populate and the rest will be history. So they're telling me that the first one, received the check of that resulting from a disposal of furniture that had cost 25 million. This transaction had not yet been recognized. One thing that I say that every time you have a disposal, you have 3 steps involved, okay? You have 3 steps, and this would be my working one. It's very good to label your workings and reference them accordingly. So this is disposal of furniture. You know, it's also very good to present very well your answers for easy number them, reference them, name workings. So now the first step, step 1, they have not asked for steps, but they're just my working, and so to explain to you is to de-recognize the asset. And this side, this time it is the furniture. So I'm going to recognize my furniture by crediting furniture. I'll credit furniture and I'll debit the disposal account. Remember, they say they didn't do anything. Okay, this is the furniture account. So when you come here, he received a check of this much resulting from a disposal. It had a cost. So usually they recognize at the cost value. So they recognize at 25 million. Let me just try to. Okay, so that's the first step. Now it's also very important, especially for this specifically. My step 2 is to de-recognize the accumulated depreciation. So they're telling us that we received a check of 25 million resulting from a disposal of furniture that had a cost of 25 million. They're telling us that this transaction had not yet been recognized in the books. So yours is to ask yourself, for this furniture we sold, what could be its accumulated depreciation? Okay, what could be its accumulated depreciation? Now, one thing that you need to know is that we have our so-called furniture. They have given us the furniture. They have given us that our furniture is at how much? 5% depreciation straight line. Okay. And from our, what we have within our trial balance is we have furniture. Our furniture is 34,500 million. $34,500 million. Okay. I'll just add the 3 zeros. Okay, if we were not if we are trying to look at the depreciation directly, this without taking into consideration what we do have, we'll just subject this to the cost, okay? But before that, let's look at the accumulated depreciation. So furniture has an accumulated depreciation of 3450. It has an accumulated depreciation of 3450. 1, 2, 3. So this is what is existing. This is what is existing. Now, here, the examiner has not commented about it, but for the generic, usually we have what we call a depreciation policy. And sometimes the examiner mentions this, sometimes they don't mention it, but it's usually charge full year's depreciation in the year of purchase and none in the year of disposal. Okay. Charge full year's depreciation in the year of purchase and none in the year of disposal. Now, this is one depreciation policy. The other depreciation policy that the examiner sometimes uses is depreciation is charged based on time apportionment. Depreciation is charged based on time apportionment. This is the case where you go on to now based on which month was the asset sold, okay? But and which month was it bought? Now in this question, such information has not been given, okay? Such information has not been given. The actual date when we sold the asset and when we bought the asset, such information is not given. So we will assume this policy, the first one, because of charging full year's depreciation in the year of purchase and none in the year of disposal. This is what we are going to take into consideration. Okay. It's very important to take note of that. So the examiner, most times they will speak about it. They will be able to tell you exactly what you need to be able to use. But in this case, the examiner did provide that information. But that is something good for you to understand of how we approach depreciation. Now, our interest in this case is to understand for the time that this asset existed, okay? For the time that the asset existed, the so-called our furniture that we sold, how to what extent had it depreciated, okay? To what extent? Because remember we have this depreciation of 3,450. So the question is what portion goes to the furniture that is worth the how much was the furniture that was sold? The furniture that had a cost of 25 million. The furniture that had the cost of 25 million. What is its respective depreciation? What is the respective depreciation for that furniture? Okay, that is our goal for this case. Now, if we are able to determine that, then we can be able to go on to account for our so-called disposal. We can go on to account for our called disposal. So what are we going to basically do? What we are going to do is, since they have not given us dates and so on, if this is the cost and this is accumulated depreciation, we shall ask ourselves what will such a furniture have? So just simple mathematics here, not even mathematics, okay? Is in case you have your cost accumulated depreciation. So you have your cost of 34,500. And this is the accumulated depreciation. I'm going to ask myself, what about 25 million? What would be my accumulated depreciation? Okay. So let's say maybe let me I'll say let the accumulated depreciation for the 25 million be X. Okay, so where there is a question mark, I'll put X. Then what I'll just do, I'll just cross multiply this times this is equal to this times this. I hope you remember that mathematics. 35, 34, 500,000 times X is given by 25 million times 3,450. Okay, I hope you're following like that. So my accumulated depreciation X will equal to, now I have this divided by this. That is what I'm going to basically have. And what my X will be at the end of the day, you can find a better way to calculate this, but that is how I think I would approach it. So I'll do that. So I've just used my calculator here. But in this case, I'm going to use my Excel. You can also try to calculate and see if you're going to get the same value. So I'm able to get, this is how much? This is 2.5. So 2.5 is my accumulated depreciation. 2.5 is my accumulated depreciation. So this is the adjustment that I have to do to my accumulated depreciation. So it will be debit disposal account with 2.5 and credit. Sorry, it is the other way around. We do debit because accumulated depreciation has a normal credit balance. So every time it's reducing, we debit it. So we debit accumulated depreciation with 2.5 and credit the disposal account with 2.5. Okay. That is the second step. Step 3, and again, for those that are watching live, in case you have a question, please let me not leave you behind. Step 3 is recognizing the payment or the receipt. Can call it the receipt since it's you receiving. Okay. Now here, if you're receiving money, which is the case, we shall debit cash or bank. In this case, yours is just to confirm, were they paying by cash or bank? They talked of a check of 19 to 50. So what that means is I'm going to debit my bank with 19 to 50,000 and I'll credit the disposal account with 19 to like that. Okay. Now, usually the last step, which is step 4, is to determine the profits or loss on disposal. the profit or loss on disposal. Usually this you can use a T account, or you can use a vertical computation. I usually love, or actually I find the T account easy for me, okay, to use. So for this case, I'm going to draw up my disposal account. Now, the examiner has not asked you for a disposal account, but definitely you have to determine the profit or loss on disposal. So I'll just have my disposal account as the only account. The rest of the other accounts, I'll not draw them because they waste a lot of my time and the examiner does not need them, okay? Yes, of course, you get workings, but if you can do away with them and calculate things in a different way, well and good. But this one I cannot do away because I want to determine the profit or loss on disposal. Remember for step one, where I did the first debit disposal with 25 million, I'll just record there. I'll say my amounts are in 1,000. So I'll say UJEX. Sorry, it is shillings. Shillings, 1,000. So I'll say furniture. $25 million as my first transaction there. And the second step had, we said, debit accumulated depreciation, credit disposal account. So I would come here and I say accumulated depreciation, $2.5. Okay. And the next step here, recognizing the receipt, we said we debit bank with 1925 and credit disposal. So I'll come here and say bank. Again, I will not call it disposal since it's a disposal account. 9250, like that. So after I've done that, I will balance off my account. This account should be able to total. The totals should be able to balance. But as you can see, this side is higher compared to this side. So we shall introduce a value here, and this will be, now the balancing figure in this case will either be a profit or loss. But as you can see here, if your furniture was at 25 million, and it had depreciated 2,500, it was ideally supposed to be valued at 22,500. But these guys gave you 19,250. So what this means is that there is a loss on disposal. There is a loss on disposal. So that means I'm going to do 25,000 minus 21,750, which gives me a loss on disposal of 3,250. And I hope you also get the same. So that is my loss on disposal. So that is all I needed to do for the first part of my additional information. Now I'm going to now do the second one, which is the depreciation I'm going to depreciate them very fast. So I'll just copy that into my working tool. I'll say working tool. This information is not coming in well, but let me just copy one by one. You should also be calculating these things in your book as well. I encourage you that whenever you're attending class, either you're watching a previous video I've done, always watch it with your counter book or exercise book. So that even before I do something, you've already gone ahead to write what exactly you think I should be able to write. So this is furniture. So this is what I'll do. This is assets. This is depreciation percentage. So motor vehicles have 25%. And remember, this is reducing balance. Okay. So for me to ease my, okay. Just copy everything here. So by right now, these things should be very easy for you. It's just a matter of time. Whenever you see these should be really free marks for you, because there's nothing hard in calculating depreciation using any of the methods. So let me just start with motor vehicle. Now, depreciation will equal to 25% times the net book value. Now, look, my net book value is going to be the cost, which is 350,000. 350,000 minus 15 that, okay? That is exactly what I'm going to basically have. So you're able to calculate with your calculator. You should be able to give me the result. So I get 40, it is 49,218. Do we all get that? I think so. I'll move to machinery. My depreciation, in this case, will be the 20%. Still reducing balance, so I'm still going to go and look for my cost. My cost for this is 400,000. It's 400,000. And this I'll subtract. I'll do subtract my accumulated depreciation of 144. Of 144. So this gives me 51,200. I'll move to equipment. Now you make sure that you're taking into consideration any additional information you may have on these assets, either they were disposed of also or what. So we are going to do, I'm going to do 10% directly on the cost. 10% directly on the cost. The cost is 36,000, 36 million. So it gives me gives me this. I know that for the rest of no, sorry. Sorry about the equipment. Equipment, I'm supposed to pick this value, not again the other value. I'm supposed to pick this value. Okay, I'd use the accumulated depreciation value. I'm supposed to pick, you look at this, I'm supposed to pick the 180,000. That is what I'm supposed to use, not this one, not this 36. This is accumulated depreciation. Whenever it is straight line, my focus should only be on the cost alone, which in this case is 180,000. Okay, so this is 180. 180,000. So it gives me 18,000. Okay, it gives me 18,000. I'll just say these amounts are in shillings, thousands, just so the examiner knows that I'm working in shillings, thousands. Remember, we're picking them from the trial balance, which is already in thousands, so that is very key. Now there's this furniture. Now this furniture, we have, remember we had furniture up to the tune of 34,500 million. But of course we have accumulated depreciation, but then we also sold off something that was costing 25 million. So furniture, remember, is straight line. So I have to determine the new cost, because if I hadn't sold anything, I was just going to take the 34,500,000. But since I sold off 25 million, I should get the difference. So my depreciation, remember also, I say that we will take the generic assumption that we don't depreciate in the year of disposal. So in the year that we are in the year that we disposed of, we are only looking at only the assets that remained. So this is 34 million minus 25 million, like that. Now, this gives me 475. But since these figures are in thousands, let me just try to be consistent here, so that I remove these millions so that I am able to get similar values. So I'll just remove the 3 zeros, not to confuse you. So even here, so it's about 475, okay? 475. I remove also the decimal points so that we are working with absolute figures as well. I believe we are okay up there. So on this question, we should be okay now. This we should be okay. We've handled that. I just want us to handle this now. Now, this one we had already computed our interest, where we say that if this is a loan of 8%, we need to compute the interest. What would be the interest? And we did say that it would be you'd get your 0.008 times the 1.2. And you come to 9.6 times the 120 million. I think this is 120 million. Yes, it is 120 million. So you get 9.6. So what is the examiner telling us? The examiner is telling us that they paid only 1.2. So what I'm going to come here, I'm going to come to my working. And I'll call this working 3. Say interest on the loan will be given by 8% times 120 million. Like that, which would give me 9.6. Interest paid is 1.2. Interest paid is 1.2. And I'll have outstanding interest. I hope we are okay up to where I am there. So we have to determine our so-called outstanding interest. Outstanding interest. Okay. Now, when you try to get the difference between these two values, this minus this, you get 8.4. So 8.4 is outstanding interest. And what did the examiner tell you? The examiner told us that this was paid out of the total interest, the balance accrued, and had not yet been recognized in the books. Interest is assumed to accrue evenly throughout the year. The business negotiated with the circle to only pay interest and not the principal. So the loan will remain, the principal will remain the same. Our liability will not change, but interest will change. So since they didn't recognize this in our books, I'll just show you the double entry for this. If you have this, let me just try to go back here. So they're telling you that the balance that accrued had not yet been recognized in the books. So it's only the balance that they didn't recognize. So this outstanding interest, they didn't recognize it. So what I'll do is I'll definitely debit the interest expense with 8.4, and I'll credit my accrued interest account with the same value. Since this is the only thing that speaks about interest, I would be interested to go back to the trial balance to see if there's anything called interest and if it has the value that. So just try to check and see. So we have do we have anything called interest? I see motor vehicle, machinery, land, capital, retained earnings, accounts payables, accounts receivable, profit for the year, accrued. Now, friends, I want you to look at critically this trial balance. As you can see in this trial balance, we don't have revenue and expenses. Do you see this? Do you see that? We don't have revenue and expenses. We don't have revenue and expenses. Yes, we have accrued rent here and prepaid, but these are assets. We don't have the revenue and expenses. Now, the examiner, the reason why they gave you this profit for the year, this profit for the year is a summary of your total revenue and your total expenses. Because ideally, for you to calculate profit, you look at your revenue and expenses. So the reason why the examiner has given you this value is what we shall adjust. Is what we shall adjust every time we have an expense. Every time we have an expense or we have revenue. Okay. So that is important. So if that is so, in this case, we have to go on to adjust accordingly. We will go on to adjust accordingly. So we are going to have what you're going to call adjusted profit. We're going to have what we call an adjusted profit. Now, this interest expense, I'm also going to put in a bracket. This can be stroke P&L, okay? But before I do the adjusted profit, I want us to first look at the last item, then I do the adjusted profit. So you can see my screen, yes. Let's just look at these two items and then do our adjusted profit. They're telling us that during the year, management decided to reduce the provision for doubtful debts to 5% of accounts received. The adjustment had not been made to the books. So I'm going to do my working for, I'll say working for. And this specifically are provisions. Provisions for bad debts. Provision for bad debts is, okay, before I get there, let's first get the facts. So after that statement, the first thing I'm interested in is what are my current provisions? So my current provisions are 3,420. My current provisions are 4,320. I'll put this into millions. 1, 2, 3. So it is 3,420. This is the old provisions. Then we have the new provisions. So my new provision for doubtful debts, the examiner is telling me that is my question, that during the year, management decided to reduce the provisions to 5% of the net accounts receivable. So 5% of the net accounts receivable. My accounts receivable is 34. This. But before I take that, I'll ask myself if any of this information had a change on my accounts receivable. But in this case, I've not seen any. So I'll just do 5% times my accounts receivable, which is 34,200. So I'll just come here and say 5% times 34,200. And when I do this, okay, I'm going to add the 3 zeros to be consistent. Even here. Okay, it's 34,200, so I need to add another 0 here. This is okay. So this is what I'm able to get. I'm able to get 17 that. So this is the new provision. Then I have to compare to determine either the increment or decrease in provision. If my old is 3,420 and my new is 1,710, it means that my provision decreased. So it means that I'll have a decrease in provision of this value minus this value, which is ideally the same thing. So the value is similar, but it's not very common that value is similar, but this is the procedure. So the double entry for this transaction is debit. I'll debit my if it's a decrease in provision, what we usually do is we debit the provisions account with the decrease 171, and I'll credit my P and L Now, a decrease in provision is an income. Whenever your people that are likely to pay, not to pay you reduce, it's in a better, it's on a better side of you. Okay, I hope you get that principle. So before I do proceed from here, Kenneth Waiswa, what is your challenge on these provisions? Could you just ask what is your challenge on provisions? Waiswa, are you there?
Yes, I'm there.
Okay, so what is your challenge on provisions? What is confusing you?
No, it wasn't actually confusing. I just needed clarity on the treatment of the change, the result of the change after the comparison. The double entry was what I was keen on understanding.
So have you understood it now?
Very well, thank you, sir.
Okay, you're welcome. All right, so that is what you do. Jacqueline, your hand is up. Is that in your hand?
Yes, sir.
Please.
I want to ask, when they say, like, if they say they've increased the provision by 5, what do you do? Do you add or multiply? And when they say they've increased the provision to 5%, so that's the confusion I have when they use by and to.
Okay, good question. And I just want us to revisit this question and see if they say by or they say to. So for our question here, they said increased to 5%. So it means that this is actually what we should do, okay? If they say increased by 2% or 5%, means that you have to get the previous percentage. If it was 10, and then add 5% on it, and that will be 15%. So you do 15% now times your accounts receivables. In most cases where they are saying increased to, they will give you the previous, say, percentage. Okay, so that is what happens. So it's even just like depreciation. If it is to like if they're saying increase to, you take that as the new rate. If they say increased by, you get the old rate and add the new rate. Is that okay, Jacqueline?
Yes, sir.
Okay, so fine, thanks. So for this case, in case it was definite, because it was an increase is usually we debit the bad debts. We debit the bad debts with the increment. Sometimes we also debit the profit and loss. Now, whenever you say we're debiting profit and loss, means that we take that item as an expense. Just like where we're saying here, we credit P&L, means that we shall take this decrease as an income in the P&L. So here I'm going to credit. Now, in this case, it's an increase. I'll credit my provisions because provisions have a normal debit balance. And whenever provisions are increasing, we do what? We credit them. But in this case, this is what I have. So this I don't need. So this is what I do have. Okay. I'll just do the last item. The last item here, they are telling me shillings this of business cash withdrew by the directors was excluded from the books. Working 5 is drawings. So what I'm going to do basically is I'm going to debit drawings with what they took, and I'll credit my bank with what they took. They took 2.5 million. So that is what I'm going to basically do. So I've exhausted the different notes they have given me, additional information they have given me. I'll now want to just run back to my, of course, I'll have other workings that I will calculate as I proceed. I'll be able to know what I'm going to adjust. For example, I'll come back for the adjusted profit because I know I'll need to calculate the adjustment for profit. But for now, I want to first run and first get the easy marks, okay? Because sometimes you're in an exam and you have few hour, maybe minutes to go. So you want to first get the first marks for whatever you've calculated. You want to make sure you present it, because remember in this case here, yes, the examiner told you to, they actually clearly showing adjustments. Like they didn't tell you even the workings. So all you've done is you want to ensure that you can be able to earn the marks, because most of the marks are on the presentation of the trial balance. So I'm going to start with motor vehicles. I'll start with motor vehicles. Now, it's very good for you to copy the trial balance as it is. So the motor vehicles, they gave us a debit of 350. I want you to look very well here. Now, after I have 350, I'll come through to my workings and see if there's anywhere a motor vehicle was being adjusted. Remember, this motor vehicle is cost. So cost of the motor vehicle can only be adjusted by an addition of motor vehicle, either it's a purchase of motor vehicle or a disposal of motor vehicle, and we didn't have any of those. The only part where we did something on motor vehicle was on depreciation. But the double entry for depreciation is this. You debit depreciation with the respective value. For example, in this case is 49219, and then you credit accumulated depreciation, still with the same value, 49219. So ideally, whenever you're depreciating assets, it has no effect on the motor vehicle account. So here, for my motor vehicle, are you seeing that I don't have any adjustment? So there will be no adjustment. So my corrected, this will just be the same amount as that. I'll proceed to the next one. Machinery, same story. I'll just come here. You're going to see how this is going to change when I now have a disposal for furniture. So equipment will remain the same. I'm going to try to run through this. Equipment will also remain the same. But one thing that you're going to see, okay, land will also remain the same. By the way, land is not depreciated. That is why we even didn't depreciate it. It is one of those assets that are not depreciated. But advanced accounting, we revalue. Of course, we know that land keeps on getting value. So there's revaluing of land, revaluations that can take place. So my furniture, this is what I have. And if I'm doing anything that you don't understand, you just put up your hand and I'll be able to get it. Now, this trial balance, you just want to ensure that it has a heading. Okay, heading is very important. Why? Because the examiner is even able to know what question they are marking. So hey traders, trial balance. So this trial balance is for which period? Is for the year ended. Okay, it's not, it's for the year ended 30 June. I know that it is not as per se trial balance because we are looking at several things. But if you want to get, usually what sometimes I use, I come here and look at what they have asked me. So it's a serial trial balance respectively. So land we've handled, let me say, furniture. Had I put furniture already? Okay, I already have 350. 500. And also you also need to show, remember that these amounts are in shillings, thousands. This is very important to include this degree of precision. Okay. And once I have that, what I'm going to proceed now, furniture, I'm going to come to my working here and say furniture reduced by how much? Remember, it's the cost. And when I was disposing of, I credited my furniture with 25 million. So furniture reduced by what? By 25,000. So just come here and I'm going to record this amount in the credit side because here we are saying we credit furniture. So that's why I'm going to record it here. Again, when I'm doing the adjustments, things of normal balance don't come into picture. You're trying to show the effect. So it means that I'll remain with only that. Remember, I've not brought in depreciation here. This is about the furniture account at itself. So once I'm done, I'll come to my capital. Now my capital is, yes, Kenneth, please, you can unmute and ask.
Mr. Samuel, I thought furniture, the adjustment of 25 million should be under the adjustment column.
Okay. Very right. Very right. Thanks for saying that. Okay, this is actually supposed to be in the credits in the adjustments column. Whatever the adjusting is within this column. So thank you for that and for supporting. Others had not seen it. So for capital, we have that value there. Yours is to ask yourself, has capital changed? Now, capital only changes when the owners contribute more capital. Okay? When they contribute more capital. Now, I know we have a case where these owners used business cash for their personal trip. But in this case, those are drawings. So capital will remain with its what? Its value. There's no adjustment, so I'll put it on the credit side there. I'll now move to the next item. Now, these retained earnings, they are the ones that are beginning. Now, these ones will definitely, since it's the starting figure will remain the same. We don't have any adjustment on the starting figure because we're also going to have a line for profit.
Excuse me, sir.
Yes.
Why are you debiting capital reported trial balance and crediting it on corrected trial balance?
Okay. Again, I'm trying now to test our double entry. And I like the fact that you're able to, we say that capital and retained earnings have a normal credit balance, so they should be credited. So thanks so much that you've been able to spot that.
Okay.
Yeah. So, and that's why you see here on the corrected trial balance, they're actually on the credit side. So that is what you're supposed to do. Whatever we record here in the reported trial balance is as is of how it is in here. So whatever is on the credit side, you put it on the credit side. Whatever is on the debit side, you put it as well. So accounts receivable, as you can see, it's on the debit side. So we shall put it on the debit side. So 320. So you have to be very, very attentive. And even when you're transferring these figures, so that you know where to put. So this is here. You just ask yourself, did accounts receivables have any adjustments? You come, usually it is around provisions. Let's just look at the provision. We say that the decrease in provision, this is the double entry. We debit provisions and credit P&L. So here, do we have anything to do with accounts receivable? No. We don't have. We would only have an adjustment in accounts receivable if at all we were writing off some accounts receivable. But for this case, we're not writing off any accounts receivable. So that is important. So let's proceed. Profit for the year. Now, I'm going to first leave this aspect of profit for the year because this one has some adjustments because the profit changed. Remember, profit is a demonstration of this profit is representing the expenses and the revenue. So any cases where we had a revenue and an expense within our adjustment, we have to adjust our profit. Okay, we have to adjust our profit. But allow me first revert to it after I've recorded some of these things. Remember, if you have very limited time, you want to first earn some marks. So I'll first go to equity rent. It has no problem for you to change the arrangement. Accrued rent is a liability. It is on the credit side. You just ask yourself, was there any change in accrued rent? I don't remember any information to do with accrued rent. So it remained the same. I'll move to prepaid utilities, which is 10 that. I'll just, you see, this is just copy and paste. This is a debit. So put it there and I'll come and debit it there.
Excuse me, sir.
Yes.
What have you talked about accounts payables?
Accounts payables. We've not yet, okay. Accounts payables, I think we had just left this, but this has no any adjustment. So you just record it on the credit side here, and since there's no adjustment, you put it there, right there. Like I said, the order does not matter. So you can put it down here. And okay, so accrued rent, we've recorded. Prepaid utilities recorded. Of course, you can come back and check to make sure that you've recorded everything. Let me to take the loan. The loan is 120. It is on the credit side here. It didn't change. Reason why it didn't change because the company negotiated that it will not pay in the year of in this year. Okay, remember that comment that they will not pay anything in the year here. So that is why it didn't change. Okay, that is why it doesn't change. So the next thing I'm going to copy is now this cash. Was there a change on cash? There is percent change on cash. I know there is a change on bank, but cash, I don't remember anything to do with a change on cash. Unless somebody remembers. There's something. Let's just look at our working here. Let's just look at our working and see if we had any cash. Okay, let's first see something. Let's see what did these guys withdraw? Okay, remember what these guys did? They actually, with the drawings are not in bank, are not check. It's actually cash. So that means that there is actually a change on cash due to what these guys took. So there's actually a change on cash or by to 500. That's the only way where cash is mentioned. So an adjustment on cash. Cash.
So what about the cash from the disposal?
The cash from disposal, good question. When you come here, they told us that we received a check. And remember, cash and bank are separated, so we shall adjust it on the bank. Is that okay?
Okay.
Yeah, so I'll put in the credit column, which is this one to 500. And that means I'll have, it will be on debit side, this minus this, like that. And I'll move to this bank. I want to come back for bank. Okay. I want to come back for bank, but I can actually record bank. Let's just try to record it. It doesn't have many transactions. So bank is on the credit side. Now the adjustments to bank, let's just see the adjustments to bank. The first working, this did have adjustments to bank. Oh, it has within this step, we have a 19,500. So this 19 is an adjustment, but it's an adjustment on the debit side because we were debiting bank here. So I'm going to come to the debit column here. Okay. I'm going to come to the debit column. Let me try to freeze this pen. Just a moment. Just wanted to keep my headings. So my bank has a debit of that value. I'll ask myself, is there any other case where a bank was affected? No, because the interest paid, they told me that this had been recognized. It's only this that was not recognized, which I recognized and doesn't have bank involved. So I think for bank, that is the only aspect. So I want you to look critically here. What I'm going to do with this, I'm now going, since this is a credit and have a debit, okay? You get to realize that our net, because it's more of negative 15 plus 19, this. So we are going to end up with a debit because this is negative this plus this, which gives us a 3,800. Okay, on the debit side. So our bank has now turned into, it was an overdraft, but because of this 19, we are now have our positive there. Okay. Let's just run to accumulated depreciation. My accumulated depreciation, I'm going to have my respective values. I'll just copy them from up so that I save my time. So you have already the figures that you have. This is 1.5 that, so you record it. It's a lot of work, but we shall handle. So for equipment, it is 36,000. And for furniture, it is 34.50. So now this is what we have, but we have adjustments. Remember what I said with depreciation, our double entry, you debit depreciation, credit accumulated depreciation. So I'm going to have, for motor vehicle, I'm going to have an adjustment on the credit side. For this, I'm going to have an adjustment still on the credit side. Equipment, I'm going to have an adjustment on the credit side. Now, furniture had two adjustments. Remember when we were here, when we are disposing of the asset, we say that we debit accumulated depreciation with 2.5 and credit the disposal. So I'm going to recognize the 2,500 here under the debit, since we were saying that we debit our disposal account, and I'm going to come and credit this one for the depreciation for the year, which is 475. I hope you're following. So what I'm going to have as my corrected will be this minus this, since whenever you debit the accumulated depreciation account for any asset, it's more of reducing it. So the 2,500 is reducing, well, the 475 is actually adding there. So that's why we have the 1,425. And then let me first do my provisions and then add anything else that came through in this journey. So this is a credit of this value. I'll come to where my adjustments for provisions. Remember, I said it's a decrease, which decrease with debit provisions with this value. So I'll come and debit. I'll move the 3 zeros. So debit, that means that my new value will be just the difference between this and that. Okay, that is what we just basically do for the provisions. Okay, now After I have done this, I want to look through my workings and see any new accounts that have come through because of the adjustments in given to us. So I have a disposal account. It was not in the previous trial balance, but it came through. Remember, it had a debit of 25,000. So I'll record a debit here. Then it had recognize this where we say that our double entry is debit accumulated depreciation, credit disposal. So I'll have in adjustments a credit of 2,500. And then I have a case here where we recognize the receipt, where we credited the disposal with 19,250. 19,250. I hope we are okay up to there. And the other thing is that in the disposal account, remember the disposal.
I think I'm lost. You say you credit and then you're debiting. Okay. On disposal.
On the disposal. Okay. Let me just try to repeat this. So we're together. So this was okay because we debited our disposal. And for step 3, we credited 1925. So you in adjustments, let's put the 1925. I think it has a 0. Yes, it has a 0 under the credit disposal. We had something and okay. This for the accumulated depreciation, we said we credit with 25 to 2,500,000. So it's this
plus the 2,500
plus the 2,500, which gives us the 21 that. Now we also came to our disposal account and we balanced it off, and we had, now in balancing off, determining the profit or loss on disposal, this is the double entry. We debit the profit and loss or profit or loss account. It's actually called a profit or loss account because you cannot have a profit and loss. But the name profit and loss is very common to us. So debit profit or loss with the loss 325, and then credit disposal with the 3,250. Now, in most cases, we don't retain the disposal accounts in our books. So we balance them off, and balancing them off, this is a double entry. And that is why we credited here with the 3,250, and this 3,250 is supposed to be taken to the profit and loss. We are going to use it when we are adjusting our profit. So it means that in addition to what we have here, we have to add the loss on disposal, which was the 3,250. 3,250. That. So at the end of the day, your trial balance, the disposal account here will be 0. The disposal account will definitely be 0. Will not have any value. Okay, that is the disposal account. So disposal account, furniture account, I'm done. Accumulated depreciation, we've tackled that. Bank, have tackled it. Disposal, no longer relevant for me. Now, depreciation here, I have tackled this one, but this one is remaining. I'm going to tackle it now. I will not introduce a depreciation account here because from our question, you remember we had a depreciation, we didn't have expenses listed and revenue, we had profit. So I'm going just to have an adjusted profit, which is what I'm going to work out as my last thing. So I'll just look for another account. Now, interest. This I'm also going to put it under my adjusted profit, but I have a new account called accrued interest. So I'll just come here, accrued interest account. It didn't have anything here, but it had an adjustment of 8,400. And this adjustment is crediting it. So I'll come and credit 8,400. And once I have the 8,400, I'll now go on to record it in this other side. So that is that. I'm come back for that. I will not introduce an interest account since we have that. Again, this one, we say that we debit provisions, which provisions we have adjusted. Then we have the one for P&L. So again, this one, when I'm doing my adjustment profits, I have to adjust this one. Then I have this one for drawings. Cash, I've already adjusted, but now I have a new account called drawings. So drawings is a new account. I didn't have anything here, but I had an adjustment, and this adjustment is a debit of 2,500. So I'll come to here and I'm going to debit 2,500. That is what I'm going to basically do. Okay. I'll come and check and see. I don't have any other. So if I don't have any other, let me just work on my working 6. I'm going to do my adjusted profit. And I want you to look at it. Usually, sometimes the examiner asks you this in different ways, adjusted profit. So my adjusted profit, I'm going to go to my trial balance. I'm going to go to my trial balance. And see the profit for the year. So the profit for the year is this. So this is like my balance brought down before the adjustments. Before I can have the adjustments, this is what I have. So I'll just bring it here. I'll say this adjusted profit is in shillings, thousands. Okay. So this is the profit for the year. Now there are items that I'm going to add on my adjusted profits and the items that I'm going to subtract. So let me start with items that I'm adding, okay, on my profit. I'm going to still go back here and see where profit was, came through, anything that has an expense or P&L. So for the first working, the area where I had profit and loss is 3,250. And this was a debit. So this is a subtraction, okay? But for me to save time, okay, this is a subtraction. For me to save time, I'll just copy it. Since I'm using my Excel, so I'll just say less. So I have the so-called loss on disposal of 3 to this. Okay. I'll go back. For working one, that is the only adjustment I'll make. For this specifically, I have a debit depreciation. Depreciation is an expense, and this will be more of like debiting my so-called profit and loss account. So this depreciation affects profit. Okay, depreciation affects profit. So what I'm just going to basically do, I'm going to still, this is depreciation. Depreciation of these different assets. Those are the assets I have. So the assets that I do have are those ones. So I'm now going to pick these values. This. So that is what I basically have. Okay. So I'll go back again and search for anything that affects my depreciation. That one I'm done. Interest on loan. So I'll just come and say interest. Come and arrange it from here. So my interest is an expense. Now, it has just copied this, but this is supposed to be, what I'm trying to pick is this interest of 8,400. 8,400, okay? Okay, after interest, I want to pick my provisions. Remember, the provisions were decreasing. So the provisions were decreasing and my P&L is being credited. So what I'm going to do is I'm going to just say decrease in provisions as an income. It's the only addition I think actually I have. This has also just picked a wrong figure. I'll just go and pick it and paste values. Oh. Decrease in provisions. 171. I think that is what I have. Yes. So this one, you can just do a Z if you've left space already. So I'll come here and I say adjusted profit. Let's see, it might be a profit, it might be a loss. Okay. Let me just see. So this is the game. My additions, I can just get a subtotals. Subtotals for this. The subtotal for that is 1305 that. The above one, what I'm adding is just one item, so it's just its own subtotal. So what this would be is, it's going to be this plus this minus that. Oh, sorry, minus the subtotal. So when you look at this value, it's actually a negative. So this is actually a loss. This is a loss. And this will be the loss for the year. Okay. So what I'm going to do here, now I also want to show it here within my working on what is the adjustment. So what I can basically do is I can write my profit. Say, actually now, should I call it profit or loss for the year? I'll call it, let me call it profit for the year, since that is what it was being called. But when you see, according to what we have our figure is 11,4600. So I'll just try to record that the year. Is it on the credit side? No, it's on the credit side. The adjustments on the debit side is basically this total of whatever we are lessing. The adjustments on the credit side is whatever has been added. Sorry, the decrease in provisions here. So whatever we remain with, we realize it is a negative, which is on the credit side. So it is just this minus this plus this. So it's 14 that you don't need to, since you already made it credit, doesn't have to have a negative. You don't have to leave a negative there. It can just be 14 to that.
I'm confused. I thought it's the 1710 to be under the debit, then the other one under the credit.
Profit has a normal credit balance. So anything that reduces profit is credited, and anything that adds to profit is credited, and anything that reduces profits is debited. So we saw that the credit is, this is increasing the profit, well, this is reducing the profit, and it's very similar to what we had when we were calculating our adjusted profit. And when you look at even the previous trial balance, you saw that profit had a credit balance. So anything that increases it is credited, and anything that reduces it is debited. Is that okay?
Yes, thank you.
You're welcome. So the corrected trial balance will give us a debit balance instead of a credit balance. So it means that this time we have a loss. So our friends, yours is to just look through the adjustments to confirm that there is nothing that we have left out. Of course, with the depreciation and the other expenses have been adjusted here. If you have, then you just come and put your totals. Just come and put your totals for all the columns, okay? That is what you do. Are there any let's just make sure that we have taken note of everything. Have we recorded everything? Now, ideally, for you to confirm that you've recorded everything, your trial balance has to balance, okay? And as we can see here, our trial balance has some difference.
You didn't put the balances for under corrected trial balance for the depreciation figures.
Okay. Okay, for motor vehicles. So The new figures here is this was the reported trial balance plus this. So we're able to put them and you actually get your balance sheet balance. Your trial balance, sorry, not balance sheet. So your trial balance has actually balanced. Even the adjustments here, this is what we had. I think there's something that we didn't, we either didn't record rightly here. What is giving, but this should really tally with what you have in your trial balance. So you just try to validate. Let me just try to see if there's anything that we left out. Of course, we've already earned the marks there, but just confirm. So there's a 25,000. So you just go back to your trial balance to see what item had a 25,000. Let's see. Actually, it should be on the credit side. Okay. What we basically, what is bringing back the difference is this. Let you look at this disposal account. Now, in the reported trial balance, we didn't have a disposal value. Okay, we didn't have the disposal value. So this debit here is actually supposed to be in the column of adjustment because it only happened in the adjustments. So that is why when you look at these values, they are now balancing. This is balancing. This is also balancing. So that's a check that you can easily make to just ensure that you have done the right thing. Okay, and that you've done the right thing. Part B of this question, very fast, asked us to do the so-called statement of financial position, which is very, very easy because you have all the information you need. Okay, you have all the information you need as long as you have a trial balance. As long as you have a trial balance, the statement of financial position is the easiest. And I'll just use the same heading. I'll just come here and borrow the heading. Hey, traders. Okay. Statement of financial position for the year ended. Remember, when we are saying statement of financial position, we said as at 30th June 2021. Okay, and we usually have assets. And here you start with your non-current assets. And your non-current assets usually look at the cost, accumulated depreciation, and the net book value. Okay. So what I'm going to do, these are my assets. The way they are is how I'm going to copy them. Their respective cost values. I'm just going to use the corrected values for in the trial balance. And that's the reason why we drew up the trial balance so that we can just have those values there. Sorry, let me just do this. So those are the values. The accumulated depreciation for each of these, they are provided here. I know that land is not, doesn't depreciate, so I'll not have anything for land, but sorry, I'm going to take the end, these ones, the last ones. Usually when you're preparing your statement of financial position, usually use the last trial balance values. And I hope these are the values. Please keep a watch and let me know where we have recorded wrongly. This does not depreciate. So the net book values, it's going to be this minus this to give me those respective values. I hope you're getting the same values. They should be. So these are only, so you have your total. Yes, you can mute and ask. Non-current assets. Somebody says a look at the, can I have a look at the trial balance? I'm going to share with you a video of this, so you look at that. Let's just finish this first. Or you can retry the question again on your own and see where you could be wrong, because it will take a lot of time. These are non-current assets. Let's do the current assets. And one of the things that I would encourage you is in the exam, don't struggle to balance off things when you have more marks that you can actually earn. Usually students take a lot of time balancing off things, and yet they would have gone ahead. For example, the time we are now doing a balance sheet, another student is still finding out why we have the difference. Yes, Angoma Jacqueline.
No, sir, continue.
Okay, fine. So I'm going to look for my, now these items, I've already recorded them. So I'll just, okay, capital I've not recorded. I'll just pick my accounts receivable. My accounts receivable, line 13 is 34,200. Okay, since this don't have any adjustment, I'll just put them in this other last column. Okay, let me just try to do this. This one will have an adjustment. Now, usually, the way we record provisions in the balance sheet statement of financial position, after receivables, we come and say less provisions. And these provisions we record here, of course, they are the current provisions value, which we had to be. Provisions is this value, 171. These provisions will now give us, okay, what we basically have is 32,490 as our accounts receivable, net accounts receivables. I could actually put them on this line and call them net accounts receivable. Right now, you know why we subtract, because you know that accounts receivables work hand in hand with the provisions. We usually provide for accounts receivables, those guys that we've sold to that are not going to pay us. After that, accrued rent, and these items are going to my liabilities. I'm just looking for now. So I'll have my cash and bank. If I leave out anything, you let me know, and then I shall record it together. Usually, what happens is if you have, you're in an exam and you're trying to run after time, you want to make sure that you're doing things very fast. Accounting, one of the things that you get to learn is that you have to be very, very fast in attempting. Here, I have to labor to explain to you, but you have to be very, very fast in recording. I don't need these values. I've already used them. Provisions, I've used this. Let me just color them. I no longer need this. Disposal, irrelevant, accrued interest, drawings for the year, all that. So I have prepaid utilities, 10,800. It has to go here. 10,800, I think so. So I don't seem to see anything else that has to go through under my current assets. So allow me get my total. So it's 134, 140. I don't know if you get the same thing. So these are my total current assets. I'll have total assets. Total assets will basically be this. Plus that, which gives me that value. The next will be equity and liabilities. And here I'll start with equity. And under equity, I have capital. Capital, we had a value of this value that didn't change. Sorry. And I'll just put it in the last column there. Sorry. I'll put capital there. Now there's something that's going to happen on retained earnings. Retained earnings, but before that, I just want to say less drawings. Let me not forget about drawings. Yes, you can ask your question. Anyone was asking a question? I'll even put this here. Less drawings of 2,500. This will give us this. Okay, I'll have my retained earnings. Now I want you to observe here. We have retained earnings that we started with at the start of the year. We have retained earnings that we started with at the start of the year that didn't change. But remember, we have to adjust them with basically the profit. Okay, with the loss, actually, we got a loss. Remember the adjusted loss that we have within our here of 1 for that has to adjust our retained earnings. And okay. So that is what I'm going to basically have for my retained earnings, which is 78, that value. I hope you get the same value as well. After retained earnings, I don't have any other item of equity. So you can get your total equity. Then you do your liabilities. I'll start with non-current liabilities. We have the loan. The loan didn't change, it's 120 million. It didn't change, remain the same. So 120,000, I'll have my current liabilities. Other non-current liabilities, you can have debentures and so on. So current liabilities, I'll start with my accrued rents. Actually, just copy them. I have accrued rents, accounts payables, accrued interest. So that is what I have. So I'll just copy their respective figures. For accrued rent, it is 2,500. Accounts payable, it is 61,500. And for accrued interest, it's 8,400. Okay. So you can get your total current liabilities or total liabilities. Let me just try to total them together because of time. And then at last you have your total equity and liabilities, which should be summation of this plus your total equity. So it gives me let's see. So it gives me 799,138, yet I had 77 this. So there's something, there's a problem. So what I usually do in this case, if I have another additional number and I have issues of time, I'll run to the next number, because what I've done here, I may take a lot of time in finding out what could be the difference, okay? But since we only have this number, we can be able to find our difference. Has anyone seen the difference of yet? Anyone able to spot the difference? Okay, right here. You remember that our retained earnings were 64,505, and this 14233.75 is actually supposed to be reducing, supposed to be a negative, because it's a loss. So right here, you're supposed to deduct. And when you deduct that, you'll actually realize that this value is 770,671, and this value is also 77671. Okay, that is how your question would go. We've talked many things. We've done this last part at a very high speed, which is how you should do the exam, definitely, because you have very many questions to attempt. I'm going to share a video with you of this. I encourage you to try out this question on your own and see if you can be able to balance off your trial balance and balance off this. Or else, I encourage you to do question. There's a question, December, for those that are doing CPA, December 2021. Question 3. It has also adjusted trial balance, so it can help you to understand that concept. Other than that, if you have any question towards this, please drop it on the WhatsApp group. And if you're not part of the WhatsApp group, please reach out and I add you. I want to end this class and thank you so much for joining in, and may God bless you. Bye-bye.